Well, good morning, everyone, and welcome to Auto Week. As a wonderful presentation from Mr. Mike Whitfield. And there's a story of investment for South Africa, and that's one of many stories that's available to all of us. My presentation's slightly different, Mike. It's trying to expose a bigger conversation we all should be having, a broader topic on financial mobility, or what we call financial inclusion more generally around the world. Arguably, financial inclusion is the one problem worth solving. There are 17 Sustainable Development Goals for the United Nations. 7 of them are enabled by financial inclusion. So what is financial inclusion? It's our ability to give access to individuals, to consumers, to business, to some form of transacting account. Some ability to store their money, some ability to transact, to buy goods, and then walk the journey of moving from just saving your money in some store to moving along that journey to allowing you to participate in the economy. It is well known that small, medium, and micro businesses are the largest contributor of employment in our country. Some 70% of jobs are created by small, medium, and micro businesses. So over the next few minutes, I have the opportunity to talk to you about this burning platform for the automotive industry, not just in terms of cars and vehicles generally, but what is the problem that we want to solve? Mike eloquently articulated that South Africa will have the highest workforce between 2030 and 2035 at an African continent level. And by the top of the century, we'll grow our population some 2 billion people. So Africa will be successful, there's no doubt. The question is, how long will it take, and what choices do we need to make as industry to help gear this up? The successes and the contribution of the auto industry are clear as day. But what more can we do? What is beyond this? So over the next few minutes, I'm going to share with you some unique insights that TransUnion has to help you set the burning platform within our minds, within our organizations, and as a takeaway to say, what can we do different? Because if you understand the problem worth solving today, some 30 years into our democracy, how do we think about this future potential that both Mike and myself have now alluded to? So that's the topic for the next 25 or so minutes. So the first thing worth noting is to understand this financial inclusion. So I've attempted talking to you about a definition of this topic. It's not just you and I that need access to financial inclusion. It's those people that aren't at the conference, those that aren't able to get into those cars at the back of this room. Who are those people and what do they do? It's worth noting that many decades into our democracy, we still have one of the highest income Gini's in the world at 0.63. This is a disparity between those that have and those that don't have. This is something we've got to figure out, what is going on in our country. So I was noting earlier today that there's something we have called a national food poverty line, right? That number in 2023 is 760 Rand. So what is the national food poverty line? It's the amount of money you would need as an individual to pay for the required minimum energy intake, 760 Rand. It's grown 100 Rands on last year, so it grew 15%, right? Just to survive and have the minimum energy intake to be nutrified, to live at the basic level of existence. We call this the extreme poverty line, right? There are 18.2 million people that live below this line, 760 Rands per month that is needed to participate and have the minimum nutrition required. I was looking at some of the data beyond this. So we know that unemployment is rife in South Africa. Right now, in the latest labor force survey published by Stats South Africa, it comes in at 32.6%. Now, that's a big number. It's always been big. And you'd argue, Lee, it's going to take us many cycles of generations for us to go beyond that. But it's important to realize when you talk about the topic of financial inclusion, it refers somewhat to us in the room. But for us to truly be an equal South Africa, an equal Africa, for this to be a better life for all, we need to bring those that are excluded from the conversation, excluded from being able to transact, being able to be mobile. These are all the people that we need in the conversation that aren't here today. So that's what we're going to talk about. So in the unemployment data, it's really interesting that, as TransUnion, we see all these credit transactions, people taking on credit. So credit is a necessity in how we live our lives. It's how we leverage the money we earn to access our economy and to live our lives. It's interesting to note that we are a highly indebted society. If you look at our disposable household income, 62% of our household disposable income goes towards servicing bank debt, personal loans, cars, home loans. Now, I don't say this to scare us. It's the reality of what we have. The juxtaposition is when I talk about the seriousness of the burning platform, what do we do beyond this? What can we do more of? So it's important to know that in that 32.6%, in the 15 to 24 age group, it's over 63% that are unemployed, right? In the 25 to 35 range, it's almost 40%. Now, these are the youth. These are the people born typically after 1982. These are the people that are our future. Mike spoke about the future of Africa, right? The future requires us to do certain things, like empowering those. But through what? It's not just vehicles, it's skills, it's education, it's financial literacy, it's family planning. There's a lot that's blurring the edge of this conversation. We may say that we are the automotive industry, but beyond the automotive industry, what problem are we solving? We're looking to make Africa a place that's a better life for all of its people. And the question is, what are the things we can start thinking about in a different way? So these are some of the early things to think about. The final point I'd make on this initial slide is there's a tight correlation to what we call financial poverty and transport poverty. There's a correlation regarding the movement of people. If we can understand how people move, the question is, when people move, what does it allow them to do? So if financial inclusion implies I have access to a store of wallet, a store of money, if it implies I can participate, but if I can't move, what do I do? My family is from Chatsworth, a township in Durban, and recently I went to visit my mum, and as I drove along the Higginson Highway, which is the main highway into Chatsworth, I noticed that along the entire train line, all of the cables had been taken. Just over the last 2 or 3 years, there is no train system into the area. So the ability to move is now limited to fewer options. It's the inner circle buses, it's the taxis, and it's walking or bicycle. These are the limited options people have. So there's a provocation to ask ourselves, what is this correlation between transport poverty and financial poverty? And what role do we play in the transport side? What are the use cases that exist for us to think beyond solving the problem? So what I then did was I wanted to understand our customers, our automotive industry. These are things you may know already. I was looking earlier today at some of the cars that are available in the market. I found 5 vehicles brand new that now sell for under 200,000 rands, right? So as cheap as 189,000. There's some for early 200,000. There's some up to 250. We've been tracking our vehicle pricing index since 2011 as TransUnion. We've been monitoring this lowest car that's been financed. For many years, there were many cars under 200,000 rands, but over the last few years, using a variety of reasons, the pandemic, shortage of chips, shortage of manufacturing, the price has increased. And that's what you hear from us often in our quarterly indices around why the market is growing in a certain way. But here's an interesting stat. The average price of a finance vehicle in our latest data, 395,000 rand. Not 189, not 250, not 150. The average price of a finance vehicle across new and used is 395,000. Now that's interesting. You want to know, but Lee, why is it that much? There are much cheaper new cars available today. There's many reasons for that. One reason we spoke about over the last few months is that people are starting to think differently about their priorities as a household. They're starting to think about how they consolidate. So as opposed to having a sedan, let's get a mini SUV, let's get a cross vehicle, let's find something that gives me better utility. Many households are going from a 2-car household to a 1-car household. So that's one part of the reason. Those cars cost more. And our latest index from the last quarter, the highest increase in both new and used vehicles was in that medium-sized, mid-cross SUV body type. So that's where we were. But that's not the only reason. The next 2 stats are really interesting. So we know that many people access finance. I mentioned that 62% of household debt, household disposable income, goes towards servicing bank debt. Now, it's really interesting about the type of customers that are able to access cars. So we had to look at the people that actually buy the cars. 61% of all the deals concluded through finance arrangements go to what we call Prime Plus customers. These are your good customers, right? Not every bank, every lender is looking for a customer that's able to actually repay their debt. Now, there's a high rate of default. People aren't able to pay their debts. It's a high inflationary environment. It's now starting to get back into control. We've had many interest rates increases over the last 18 months or so. So the pressure is there from a consumer household perspective. So credit's being extended to a group of people that are able to pay their debt. Those that are on the periphery may access the financing. It's a lot more expensive. And if you do default by a small interest rate increase, that car may get repossessed, or you may not have access to that mobility anymore. The third data point worth noting is that of all the finance deals in the last quarter's data, 47% came from the millennials, right? Born after 1982. So we know that the young people, our future, want to participate in the economy. They're the ones that are successful. But now let's compare that stat with the high rate of unemployment in our youth, 63% in that 15 to 24 range of people. So we know there's high unemployment. These are the people that will drive our future. They want to work, they want to contribute, but they're restricted. Now it's really interesting for me that we got to think about, are there ways to get not people better deals or cheaper cars? How do you get more people moving? How do you reduce the unemployment from 32.6 to a lower number? Is it easy? Absolutely not. We've been trying this for decades. But it's really interesting to understand, as an automotive industry, what does our current financial agreements look like? These are three key data points worth noting. Now, as I kind of flip to the positive part of the opportunity potential here, I want to talk about the group of people that exist outside of those in the room. I mentioned to you there's extreme poverty, but it doesn't mean that South Africans are not being sustained. They're not doing things for themselves. They're able to live on just a few dollars a day, but how are they doing that? One of the key things I've been studying for quite a while is this township economy. We probably don't know this, but the township economy is worth some 900 billion rand in annual contribution to the economy. It's a few percent contribution to our GDP. It creates some 2.6 million jobs outside of formal employment. Now, it's jobs you won't recognize. It's these small and micro jobs that I keep alluding to. These are the small jobs that require 2 or 3 people just to help you go along. Many of them created in the COVID pandemic when unemployment was at their highest. We saw a situation where many of these people weren't able to get their normal jobs. They would take their payouts, set up a bakery, sell fat cook on the corner. They'd find a way to solve for themselves because the solutions aren't easy. Now, another point I didn't mention earlier is that a large part of our population has grants from government. How big is this problem? We have an adult population of 40 million. We have a total population of some 60 million, call it 65 million. There are 29 million grants today, 18 million from welfare grants, and 11 million SRDs, social relief of distress grants, that are still being paid, of 350 rand. Now think earlier about the number I mentioned, right? The national food poverty line, 760 rand. That 350 rand doesn't go all the way. So we have to solve for ourselves. What are we doing about that? Such economy is really interesting. Spaza shops, hawkers, stalls, micro industries bring up all over the time. Some 150 billion rand gets spent in spaza shops in our township economy. 150 billion rand. Things are moving around. So then I went to ask my team, let's think about where these things are coming from. A large proportion of all the produce in our fresh fruit markets are not being bought by you and I. It's actually being bought by street vendors, right? Over 50% of the produce is being bought by street vendors, and they're being moved around. So from the market, maybe in a taxi, maybe in a bakkie, to a place where they sell these produce. So something is happening within this economy. And the reason I paint this picture is that all is not forlorn. There's innovation and reimagination required. It's actually happening in a place we're not looking. The township economy is rife, creating jobs in ways that we don't count formally. But these smaller jobs are what boost the needle, right, or moves the needle. 60 to 70% of jobs come from these SMMEs. And this township economy is really compelling in what they're doing. Many examples of how things are moving. We've got pseudo Uber-type industries like We Stores, which was created a while ago, where you could sell your produce in a township setting in another platform, right? We've spoken before about the high level of mobile adoption in Africa. Africa has some 515 million mobile unique users. We all have mobile phones in our hands. That's how we do things. How can we reimagine how things happen? So the point about this is that it isn't forlorn. The industry is happening underneath, on the ground somewhat, but how do we start to find ways to connect the dot? How do we start to blur how we go to market as industries, as strategists, as marketers? How do you work differently? And we've already seen the blur happen. Many years ago, your bank was just a bank. Now your bank sells more iPads than the iPad store in Santon City. That's happening. What prevents us from blurring the lines of who we are? If the problem is financial inclusion, which is an egalitarian society, a better life for all of us, what could this look like? So there are a few things that I thought about just to lay up. We've kind of mentioned it before, but it's really important. For me, from a TransUnion perspective, I mentioned I grew up in Chatsworth in Durban, come from a 36 square meter house, like many people that grew up in our previous dispensation. One of the things I've learned is that these small, micro, medium businesses, like the one my mom had, getting leftover denim cuts, making handbags to sell at church every Sunday. These are the stories of the township economy. We think of businesses in a certain way, but who said we had to think these ways? How do we find ways to support and grow these SMMEs? A simple example, from a lending perspective, you may have the greatest idea, Mike, and you walk into a lender and you'd like to have access to finance. For us to be believing that you're worthy of finance takes a lot of convincing on your part. If it isn't a physical asset, it's an e-commerce idea. I want to do drop shipping. I want to move something along that isn't physical, that isn't retrievable, that I can't recover, right? It's very, very difficult. Finding ways to see the potential in SMEs and not the negativity. Many people that are unemployed because it says so, 32.6%. But how do you see potential? Using the data we have, using other ways to figure out who these people are. And once again, it's these small people. It's these small businesses, not the big brands. Some people say we have as much as 2.5 million small, micro, and media enterprises over and above what CIPC would record. There's many of these micro enterprises. What role do we play in enabling them? And I was thinking of a few examples earlier. I remember in the midst of the pandemic, businesses being created as Uber equivalents, Rush Courier Service as one of them. They would find ways to look at excess capacity in trucks and say, how can I help you move your goods, right? Or how do I find a way to be more mobile? So as opposed to me going to the business came to me. And I've been watching this industry really closely. I was reading earlier today about the massive growth in Checkers 6060, with their vehicles all over the place, getting your food to you in 60 minutes. Your ability to pay for something using a mobile device. I was in Rwanda recently, and I was talking to government about and that was actually just before, Martine, the previous conversation, and we were talking about VW Move in Rwanda, which I saw the day I got there, actually, and it was fascinating. But what is interesting was even government themselves in Rwanda use Momo or mobile wallets for all their payments. There's a new way of doing business, and business can come to you. Why should I go to a store physically post-COVID? Business could come to me. Why must I fill in forms? Why can't the product get to me? Why can't I return it in new ways? So there's an entire concept around this. In India, there's a concept that isn't new, but it's called DaaS, Distribution as a Service. It's finding ways to move products around. That's reality. The best example, and some of you may know this, probably the world's oldest Six Sigma production lines, actually not from the OEM sector. It's the way food moves in the city of Mumbai in India. So most Indian men that go into their workplace, they want fresh food, warm food, not food that's cold from the previous night. There's an entire system of what they call double wallahs. Double wallahs are informed, unskilled laborers that actually would go to your house, pick up a set of tiffin pots. They could have curries and rotis and breads, and they would take it from there onto a cart. The cart goes to a train station. The train station goes to the other train station. The food gets to you still warm, so you could have your lunch. When you're done, they pick up the lunch and take it back all the way emptied to your home so it can be washed and ready for the next day. That entire value chain is a lot bigger than what we think of today. We are moving people to participate in the economy. How do we find a way to get there? Whether it's a Bajaj vehicle, whether it's a train, whether it's a two-wheeler, whether it's a shared vehicle, getting people to move is how we deal with this transport poverty. And given our challenge with public infrastructure, we will do a lot more in the years and decades ahead. But right now, how can we enable other parts of the adjacent economy outside of how we currently sell vehicles in South Africa? So how we support these SMMEs are key. And there's two kind of things I want to leave you with on the slide. One, there are adjacent industries across the value chain who are thinking about how can we participate, right? It's about getting our vehicles utilized to create economic benefit. If it's sitting idle on the floor, in the factory, in the warehouse, it's not moving. There are many use cases evolving as to how we can do this. If we can get SMMEs to create jobs, this is key. As a credit bureau in one part of our business, we know that the consumers are constrained. A lot of default happening. We need more SMEs to create the jobs, and the jobs revert back on the demand side of the economy to buy our purchase, to buy our clothing, to buy our cars, to buy new things. But we need to empower the supply side of the economy. So that's idea number one. What are we doing to grow SMEs? They are key to the growth of our African economy. The second idea, which I've alluded to, is playing across the value chain. When we think about businesses or think of who we are, we've got to think differently about how we go to market. In how a business happens, we've always assumed as an automotive industry, as a retail industry, as a health industry, we've been predestined to work in a certain way. How do we find little pockets of value that we can insert ourselves into? We spoke about the sharing economy. We speak now about the distribution as a service. I don't really care as a consumer how the goods get to me, right? I care for the value. Here's an interesting provocation for all the CEOs in the room. Prior to the pandemic, I was with you as a former strategist. My big thing was we own the consumer. But now, can you really own me? In the pandemic, my entire approach to life changed. I don't get convinced by billboards or radio adverts or TV adverts. Everything's on demand when I want it. That's how I work. That's how I live my life. So if I live that way, you can't really control me. I would move for small value that I denote as value. You can't tell me what value is anymore. My loyalty has changed. And we tracked this within TransUnion. In the first 6 months of the pandemic, we found that 45% of retail transactions moved from the retailer to an intermediary, one of these online e-commerce stores, and there are quite a few, so I won't mention them. And those people didn't actually go back post-pandemic. For many of you, if it doesn't come to your doorstep, you don't want it. There's an entire ecosystem building up, not just in distribution. There's ways of working. So how I work, where I work. I mentioned mobile wallets in Rwanda earlier. I could talk about M-Pesa in Kenya. One of our clients in Kenya does 6 million microloans a day. What in India they call sachet loans, tiny loans to buy my produce, to sell it, and I'll pay you back at the end of the day. What we think is normal has been challenged fundamentally. How do you participate in that? What if we as an automotive sector got involved in the telco sector to make sure that everybody had access to a mobile wallet? Playing across the value chain means identifying use cases that don't feel like our current go-to-market, but they find ways to empower people, the mobility of people that participate in productivity activities to create value to our economy. So there are many examples globally of how we can play across the value chain, and we've got to challenge ourselves. What are we not doing? And how can we emulate what others are doing? We don't always need to be the vanguard and start from scratch. What can we leverage from other industries? And then finally, it's quite controversial because I just said you can't control or own this consumer, but you can actually build the future customer that you want. Now, you all are well aware of Jay-Z, the rapper, married to Beyonce, both two successful people. Did you know that Jay-Z has invested in building a credit app for minorities in Africa? It's like, why would Jay-Z do that? To Mike's point and my points earlier about the future of Africa, Africa is the future workforce. The future consumption of your goods and services will come from Africa. 2 billion people over the next 80 or so years. What do you do today to grow that future consumption? At the current trajectory, They could participate in informal economy. They could be part of the unemployed group, the 32.6%, or we can create the future now. We recognize it could be generational. It could take us 10, 15, 20 years. But what are we doing now? So the example of Jay-Z's credit app was to find a way to give people hope. We have an equivalent example in our business, which we work with some retailers on, which we call Credit View. So credit score is scary. If you get told, you walk into a dealership, I'm going to buy the car, and the guy says, nope, you cannot buy the car, I'm sorry, you walk away despondent. It could be a wedding ring, it could be a house, but you actually don't know how to recover. One of the things we've got to do in this future South Africa is build hope today. So a simple thing like demystifying a no into a series of that's why you know, and here's a pathway to get to yes. That's what Jay-Z is doing. That's what many businesses are doing now. We recognize that investment, like the car industry, is longer term, but what we do now to take hope and give people the tools they need to become better people, and how do we guide them along the journey? So suddenly the auto industry is going from just being an industry that manufactures vehicles, contributes to the manufacturing component of our GDP, to helping educate family planning, financial literacy, to finding adjacencies to say, guys, let me help you find hope, technical skills, right, to participate in jobs that are artisanal. Not everybody has to go to university. The acceptance rate is lower and lower every year for university. So how do you participate? So the final point of my conversation today is that the future customer is waiting, right? There's 18.2 million extreme poverty waiting for us to hold their hand and pull them up. What does it look like? It may not look like a car purchase, but there could be a series of trajectories. It's like putting a person onto a two-wheeler to get them into an entry-level vehicle and then be loyal to your brand. One of the final thoughts I'd make on this slide, we almost need to be peddlers of hope, selling hope to people that we believe in your potential, because our history tells us that we've had more no's than yeses. With that, I want to thank you for the opportunity to talk to you today about financial inclusion. I do hope you have a better sense of what it is and why it is a problem worth solving for the African continent. Our potential lies in our ability to solve not just this industry, but for all of us to come together and say, in the 18.2 million extreme poverty, in the 32.6% unemployed, in the 63% youth in the 15 to 24 age category, how do you help pull up a hand and say, here's a pathway to get there? Because the approach of black or white, 0 or 1, it doesn't work anymore. Everything is gray right now. So we need to find a way to meet our potential halfway by leaning forward, reaching out, and pulling up our citizens and our consumers to create the future that we want. Thank you for the opportunity, everybody.